Hi there, and welcome to the second season of the Humans and AI podcast. In this podcast, we dive into the real-life stories of the top leaders and entrepreneurs within the artificial intelligence, high-performance computing and data center space. These people truly are at the top of their game. We have honest and authentic conversations with all our guests. We'll chat about their career journeys, the highs and the lows, and the lessons they've learned from the mistakes they've made, and the victories they've celebrated along the way. It's all about sharing their experiences and knowledge. We talk about the company they're currently in and how they see the future of the space. So if you're looking for practical advice from people who've walked the same path, or just a little inspiration, you're in the right place. We're going to be releasing new episodes every Thursday, so make sure you stay tuned. Hey there, Aaron. How you doing? Great to see you today.
Yeah, thanks for having me, Nick.
Brilliant. So look, we obviously been talking a little bit before recently, so for the benefit of all the listeners, do you mind just giving us a little bit of an introduction as to who you are, where you're working and the role you're in, and then we'll sort of take it back to the beginning if that's okay.
Yeah, so Aaron Ginn, CEO and co-founder of Hydra Host. So we are a horizontal modular software platform that gets deployed in data centers that automates data center inventory to give access to the world to rent. So you can think of a Shopify for data centers, particularly focused on high-performance computing. We are deployed in dozens of countries and dozens of data centers. We actually have more employees we have more data centers than we do employees. We're currently managing close to 15,000 GPUs around the world, and we focus on one simple goal, which is like help data centers make money. This is my fourth company with my co-founder, so I'm a serial entrepreneur. I've done sort of lots of things around the space between working on previously helping run like a large social media network to working on politics and political areas. So the GPU stuff nicely fits into that because there's obviously GPUs are highly politicized and AI is like a sort of reflecting into the natural fabric of our civil society now. And in that we kind of came to this product because we were working in data centers and we thought that data centers were not being built enough and there's not enough power, and we're providing the software solution because we thought people were going to leave public cloud due to the shortage. And when the GPU craze sort of started, we were the only thing that was there. So we're on, I believe, year 4 of the company.
Yeah, I think I was looking on your LinkedIn, so 2021. So it's 4 years now.
Yeah, and our lead investor is Founders Fund, and then we also have several other notable large investors like Scott McNeely, who started Sun Microsystems, Saga Ventures, which is the Altman Brothers VC firm, and then also some of the neoclouds like Mitesh at Lambda and Chase at Caruso.
Fantastic, right? So it sounds like an exciting 4 years, and I'm sure even more exciting to come. So going back then, obviously you graduated from, I think, Texas University, from what I could see, and then you got into work straight away, before actually going into setting up your own businesses. So what actually inspired you to start setting up the businesses, from uni, really?
Yeah, I went to TCU, and then I also attended 2 different seminaries while I was getting an undergraduate in finance and behavioral economics. I also studied Chinese as well. And I thought I was going to be an investment banker, or kind of corporate finance. Particularly I like the airlines industry a lot, which I'm sure we'll talk about later. I find it immensely interesting because it's a quite terrible business, but also quite needed. So it's one of those kind of like weird areas it's like grocery stores or restaurants. And I actually the thing that I think every entrepreneur has this moment, this like kind of spark or some sort of like the appearance of like the raison d'etre kind of like happens. And it actually was highly academic for me. It was I actually am a published academic, and I was the only undergraduate to ever be published in a journal. And I wrote this argument that essentially I thought Maslow was stupid, and the famous kind of Maslow hierarchy. And it was like 200 pages long, and it included all of these citations across different interstudies, sort of from economics to philosophy. And I won the highest academic award for an undergraduate at my university. And that was kind of like the thing. And it was like this sort of clearing of the sky, or to use I'm an evangelical Christian, so using the Holy Spirit coming down to Jesus when he first gets baptized. It was sort of like that kind of moment. And then I'd already at that time accepted to go into investment banking. So this was the height of the great global recession, and I actually did have multiple job offers, so I was blessed with that, and I decided to go into a form of investment banking / advisory, and then all the sort of things that happened during that like great unveiling put me on a path to where I learned that I just didn't like rules. I don't like people who tell me what to do, and but I'm actually remarkably orthodox when it comes to large portions of my life. But there was something about the banking world that I was actually very good at it. I made the firm a lot of money, but it was all these like things I didn't like. I didn't like we had to show up at a certain time. I didn't like that I had to like wear something. I didn't like that there was a partner that I thought was like I generally liked, but like just didn't find very intellectual stimulating. And then when I left, actually, I was writing on Quora. When Quora first came out, I was writing all this stuff about sort of a little bit of politics, a little bit of technology, and I got hired off that website to go work in Silicon Valley. And when my partner that I was working for, he said that I was the most difficult person he ever managed, but also like made him a lot of money. So he was happy I was leaving, but also sad I was leaving at the same time. And I wasn't like I didn't have like an attitude. I just like would not, I just would argue about things that I thought like, well, I'm more effective when I like start working at 9:30 rather than 8, and I just didn't want to do 8, and just have like kind of like a logical debate about that. But like yeah, since then, even when I worked at like a series of other startups, I'm most known for working at when I left working for a presidential campaign in America, I helped Garrett, who bought back StumbleUpon. He was the co-founder of Uber. So Garrett Camp bought StumbleUpon back, which was his first company when he left Uber. So I went to go work with Garrett to like help rebuild StumbleUpon, and then I left that to go work at airline, which is a really big brand now. So I helped them become a unicorn company. So those are kind of the big areas like that I worked for somebody and like made them successful.
So just before we go on from that, sorry to interrupt, but I see a lot of successful entrepreneurs come from banking, investment banking,
sure.
and particularly in the tech space and the data center space. What is it about that background that makes you guys successful entrepreneurs, do you think? Because there's quite a few of you.
I mean, I would say at least for GPUs, a large portion of this market motion is just financial instruments. Mm-hmm. Because fundamentally GPUs is just energy, and data centers is energy. So you're trading energy, you're making energy in export, or you're consuming energy locally. But finance is like I was actually pretty bad at accounting. Both my parents are actually accountants, which they were very embarrassed by, especially when you're raised by a Chinese father. So, but finance actually was good. I was pretty good at because finance is like a story, and I still have those skills today. There's often jokes like, what do you actually learn in university to what do you apply today? There are two classes that had the biggest impact on me. One was my marketing sales class, which was taught by, I also went to the MBA at our school, MBA program. And it was just like such a revelatory thing about like how everything is sales. Like it was basically the point. And he ended up becoming dean of the school, and I'm still keep up with him because I thought his class was amazing. The other one was a strategic finance class taught by a guy from Hungary, and I forgot his name. But he, in the middle of that class, it was the financial meltdown, and so that he was like crying that day and stuff because I don't know what's going on, right? But what I learned from him was about how the chart of accounts teaches you stories. It's like language, and so much of it was much more philosophical than was accounting. Accounting's rules and structure, and then finance is more like how do you tell the story of the company, and that kind of stuck with me even to this day, where I can look at I don't trade, but if I go and like look at Apple's statements or Meta or whoever, I can like see what's happening, right? It's like how you read Harry Potter or how you read the Bible. That's like how I see it. And it is a kind of something that you can learn, but also just use kind of sort of innately gifted with. But I do think that when it comes to becoming an entrepreneur and just deciding to do that more or less. It is both a function of a gift and also necessity. That Noah Kagan has this phrase of like, when you become an entrepreneur, you become unhireable. So I do think it's that some people get pushed into it because of nature of life, but some people just choose it. And I think for me, it was more of like I kind of got pushed into it because every CEO that I worked for kind of had the same sort of feedback, which is like they both liked me, they liked my skill set in the company, but I was kind of unmanageable. Not in a like a never mistreated anybody, never was mean. It was just that I beat in my own drum, and when I feel like someone interferes with that, I become like visibly perturbed or like just don't work as well. And I think that's kind of like a group of entrepreneurs, and the other one's just like they see an opportunity, and both of them could be successful. I do think the financial people tend to be on the like they see an opportunity, and I think more the creative people tend to be like I was kind of forced into it, and so I'm kind of the blend of both, I think.
Wow, because I mean, you've got all those people giving you that feedback, so it's clear that obviously, like you say, you add a lot of value, you've made a lot of people a lot of money. You're difficult, but not difficult in a bad way. It's more you're challenging the norm and challenging the rule, and I suppose really it's led you to this point where you set up multiple businesses and it's about making your own path.
Yeah, and it's the same way. Like I have a strong interest in politics. Why I've never worked in politics is that I prefer to be an advisor or an outside voice, because I know that once you go into it, you are part of this hierarchy system, and I've never really done well in that. And there's like these people who I probably won't respect intellectually, and but they just have this role. And in some respects, like finance is kind of like that. Like everybody has, whether banking or being a trader, that you have a boss who's he's just kind of like there, and he has a position because he's either there for some long period of time or kind of ran the political ropes to get up the ladder. And for people like me who it doesn't really, age doesn't really impact me in terms of like respecting you from an intellectual or like wisdom perspective, and that there are people I listen to that are very old, that like a Thomas Sowell or Dennis Prager, and there's also people who are young that I listen to that I like comedians and things like that I find are like incredibly like wise and insightful. And to me, it's more of that kind of outcome, or you could say pragmatist approach. And in banking, that hierarchy stuff, which because their orientation is risk aversion, and same with government, and that for just me just doesn't really kind of fit. So being an outsider who kind of doesn't give an F. For people in those hierarchy structures, they tend to like I've been to the White House many times, and I've ate at the Navy mess, and I've never wore like a suit. But when you're not in the system, in the hierarchy, you can do that, and people are kind of like, oh, that's kind of cool, right? Or like, I respect that guy because he like does his own thing. But then when you get into the system, you have to do those things because then you look like you're just rebellious. So it's this weird nature. Same with like consultant. Like everybody's hired a consultant where they said the same thing as someone inside the company. But you listen to the consultant because their job is you pay him or her for advice. And so the goal is for them to give you specific insights that are, to help your company. But at the inside of the company, it's challenged with all this social stuff and history. And so that's kind of the same thing when it comes to being an entrepreneur, when you are drawn to maybe systems of power or hierarchy, and you like influencing them. But you have to kind of know where you start and stop. And we'll see this play out with the current Trump administration, because many people in tech are involved with it, including now the co-founder of Airbnb just joined Doge. But what they'll learn is that once you're in it, you lose all the things that kind of drew you to the system. So that Elon or David Sachs or any of the Doge people, like many of them are immensely credible. Like any government would be blessed to have that skill set there. But that's the government that they drew them to it. That the government's like, hey, come work for me. You lose that kind of spark because you are now part of a dictatorship. Yeah. And you lose freedom of speech. And some people will adapt, like David Sachs is adapting. You don't see him on All In anymore. You don't see him. But some of the people have not. and that whole kind of relationship will break apart, and the person that has that heterodox nature, being a purple cow nature, will be kicked out because the system doesn't tolerate that. And so I've learned to just kind of do my own thing, and then I dripped in, be helpful when I can, and then drip out because that's where I best play.
So outside looking in rather than being within it 100%.
Yeah.
So, and like you say, it takes away what's you and where you add the value if you're going into that hierarchy. So, and it's not for everybody. So obviously you've successfully built businesses before now as well. So we're able to just go through a little bit of that and just talk through those?
Yeah. So I built a couple non-venture backed companies. I think that people, I love my investors, and many of them, I'm good friends with many of them. And but I think most businesses are not, most good businesses are not fundable from a venture perspective. And it doesn't mean they're bad to do. Like personally, I love hoteling. I think hoteling is immensely interesting, and I of course, a venture capitalist would never fund a hotel, but hotels are everywhere, and they provide a lot of value to customers. And so, two of the companies were that. One of them ended up becoming a foundation. So it's one of the leading center-right think tanks, only focused on technology. We were very early on being China hawks, very early on being pro-crypto. We were against basically regulation, pro-free speech, against any form of regulating access to the internet. Almost on the verge of like you have the right to compute. I'm almost kind of like there. I'm mostly on the negative right side rather than positive right side of government, but essentially kind of that perspective. It's been around for almost a decade. So those are kind of the three we did, and then Hydra became a product that we were doing as a service project, as in like a client services, and then we spun it out and we started working on it separately, and then we raised money for that because you generally want to pick businesses that have investors that have some high either gross margin or create some massive amount of leverage, or you need capital to build something that can be a moat. And so with this, we actually saw that it not we from day one of the company, we were generating revenue. It's just something I believe as an entrepreneur that someone has to pay for this. So like Safe Intelligence is about to raise $1 billion at $30 billion valuation. Has never. It hasn't delivered a model either. So that's something as just an entrepreneur I just don't. I just don't do. People can get money and do that. Props to them. It's not something from the values perspective of my company that I would never run a company that way. So Hydra from day one was making money, was having people pay a SaaS fee, and so we decided to raise money for that because we saw a bunch of the nice hallmarks that make something venture backable. Because the goal is, of course, not cash flow, but to generate returns via equity, and the only way to do that is to have the ability to have potentially significantly higher margins in the future, and that's what we saw with Hydra. So, but yeah, like generally building things for over, and actually everything's been done with my same co-founder, Garrett. So we've done 4 companies together. We've alternated CEO roles. And so we have the ability to do that as co-founding team. And then Ariel, my other co-founder at Hydra, he was also a co-founder of another company with us. So of the companies we built, several of the engineers go in and out. So in fact, 4 of our engineers that are at Hydra have worked at our other companies. And then some of those other guys have come and left and done other things and come back. So we like that. Shows that we can generate a good culture, and that we can have these like kind of long-term employees, even if they're just like working on contract. That shows that we're doing something right in terms of like how we build talent.
So just going back to your point there with Garrett, so obviously there's obviously 3 co-founders, but I think Garrett's the one I think maybe from the beginning, and he's the COO.
He's the COO.
And you alternate CEO roles with him, do you? Is that how often? Is that between businesses, or is that sort of a diarized thing? How does it work?
Yeah, it's really when him and I talk, it's like, okay, we're doing something different or like new. Who is best to do that? And so, for example, for like our foundation, he's chairman of the board. And so I'm just a board member. He was CEO of that. I was CEO of that at the time. We kind of alternated depending on what needed in the company. And same with like our services businesses, like, we've alternated because maybe one of us goes to the next thing, and he stays behind, does something else. He wants to go do something here so that he takes it over. So all these different companies we built are a little bit more like projects to us that express our interests as people. And we do have skill sets that are very, very different. Like, he's better at operational stuff. He's better at being a manager. He also can sell. Like, I'm better at being a seller, being problem solving, vision casting. So it's just kind of like where the company needs and what we have to do next to like help it grow. And yeah, it's just always been super easy. It's one of those things in becoming an entrepreneur that everybody looks for and hopes they'll find is that business partner they can just continue to do stuff with. And they both have dexterity to flex into in and out of needs for the company and the team. And Garrett was just the person I found that it was actually introduced to me after I left working for a presidential campaign. And then we just kind of hit it off. And in the first 1 or 2 years, we're trying to figure out how to work together. Because he started a company, he was about to sell it. I was still working for somebody else, and then it just kind of clicked after that. And the same with Ariel, is that he came in as a head of engineering, and then it's just one of those kind of things that you just start innately trusting that person, and you'll be able to work through issues, and it's just easy. And that's one of the best parts of having a co-founder that you've worked with over a decade, is that it's just easy. And like, you know what they care about, they know what you care about, you know how to work through issues, and anything that is, argument, it's super rare. Like we have maybe one argument a year about something. And it's just this innate understanding about how both of us work and what we're really strong in. So even though the goals of every company has changed and the markets have changed, the fundamental skill sets behind both of us being an entrepreneur, say with Ariel, is those are the same skills you need in all those places. And so I'm a big believer in being an entrepreneur and just targeting whatever market. I do think that you need some innate sort of historical knowledge of a particular market of industry, but I am more on the side of when venture people talk about entrepreneurship, some VCs will target intentional entrepreneurs who have no experience in an industry. I'm more on that side of the skill set that you look for and who you're investing in, because you want that ability to think of well, why can't it be this way? And that's what it creates immense value for a new company. Derivatives are people who have a lot of experience. They can be part of a founding team, but they generally shouldn't be in charge. They're there to either bring in an existing network or be able to iterate on the ideas of what the company is bringing. But you want some form of naivete. You want somebody who's going to swing for the fences and do something different. And derivatives of the space is just could still be if the founding team is a derivative of the current industry, could still be an amazing company, but it's not really venture backable, because that venture investor is looking for 10x return, 100x return. The derivatives, they're going to generate still amazing probably returns, 5x or something like that. But for a fund who's going to have so many losses, they need to overcome that. And so they need somebody to do structurally something really different.
Fantastic. So you, obviously you've got this team. You interchange in your roles. You have that naivety that enables you to break the mold necessarily and go and do things slightly different and actually learn from those mistakes you might make, but also actually create greater wins. It's very unusual. Obviously we all heard of people having really great business partners and double acts. There's usually a bit of a hierarchy. So the fact that you can actually interchange, it's probably the first time I've ever heard of it. It obviously works for you. It's great. It's really good. It's amazing. And in terms of obviously where you're taking the business, so as it stands, you've got your roles. You've got 15,000 GPUs roughly in production across multiple locations, multiple data centers with your software stack there. What's the plan for the next sort of year? Obviously, there's a lot of work to do. The market's booming. How are you going to capitalize?
Yeah, our goal is to be the largest GPU management company in the world. So we want to be 1 million GPUs by the end of next year. and we have a horizontal platform, modular platform that makes that possible. Our thesis is that the space, going back to the airlines, what I said earlier, that was a job offer for me to work in American Airlines. Glad it did not. That airline sucks, and they went bankrupt. So that we think that the space looks a lot like that industry. So there already are very kind of prima facie similarities, right? Significant capex is needed to run both of those industries. High regionalization because your chips are located in a particular state or region. You need significant amounts of people to run these operations, and that every one of these businesses is generating a significant high level GMV, a significant level top line, just like the airlines. Delta generates tens of billions of dollars a year, and it has one of the highest gross margins, in profit margins of any airline in the world, and it's only 12%. Versus if you look at Google, that would be like utterly embarrassment in terms of the net. Their free cash flow is like $100 billion a year. So you see that if the GPU space looks from a corporate incorporation perspective very similar to airlines, the question then is does a market behave that way? And our thesis is that the market is actually supply driven. We actually don't think it's demand driven. We all talk about demand customers because we like making money, but if you look at the nature of airlines, of would I book British Airways between Denver and Chicago? Well, they don't support that route, so why would I go look at British Airways? The same thing, of course, sort of exists with GPUs. It's if you don't support consumer cards, if you don't have, the Blackwell, I'm not going to bring you my Blackwell request. And we see that with cluster sizes too. And granted, we have a different view of this. We work horizontally across data centers. Data centers that don't have a 1024 GPU cluster, they don't get requests for 1024s. Right? If you only have individual small nodes, that's the type of customer that's going to come to you, and it is so that implies pretty significantly as a signal versus noise that this is a supply driven market. That what you have generates what type of customers that comes to you. Same with if you're going to do an 8,000 card cluster. The people you're going to go to are going to be like Oracle and CoreWeave. You're probably not going to bring that to a Lambda Labs or Crusoe, which focuses on still large clusters, but not 8,000 or 15,000 card clusters. You're going to go to a more of a enterprise type colo management type of company, and so that we think also checks the mark. Then you then go into I think more subtle trends that you see in the space. One of them is political. So in America, we have we're supposedly the greatest free market country in the Western alliance, but there are 300 bills up for consideration to regulate AI and GPUs. Many of them have already passed different states. Colorado has one that's quite aggressive, very European-like. California one's probably it's being reconsidered again in the U.S. federal government. We just had a bill in the Senate, just got approved that regulates basically AI-generated images that are explicit in nature. So we have over 300 bills across the state and federal government that are about regulating AI or GPU access. And for arcs of curve of innovation, this is literally the fastest we've ever seen. For considering the previous wave, right? So that would be social media. That wave, you looked at the first real types of regulation really occurred around 8 to 10 years after Facebook, and that was net neutrality. That was that big effort to create equal rails. And so we're looking at 1 to 2 years that came in. So the accelerated curve is very, very steep. And so in that space where you have high levels of CapEx, high levels of OpEx, significant regionality, it again is another thing that looks like the airlines industry, because the airlines industry is regulated with open skies, where it basically similar laws with cruise lining and boating, they basically apply to airlines industry and provided all these various forms of port of entry and where you can fly and who can own what portion of what airline, and it basically protects both the ability of nation states to have sovereign airlines like Air France and Lufthansa, British Airways. Also gives the ability of Ryanair to come up, or budget airlines to appear, and it allows countries to both freely interchange capacity, but also protects local aspects. Then the other components that I think are going to become more and more obvious are going to be the more technical. So first is that the innate goal of Jensen is his opponent is not his second cousin Lisa at AMD. He doesn't even really think about her. I would imagine he's mostly concerned about Amazon, Azure, and Google. And he knows that if he's going to be an $8 trillion company, he can't sell to 3 people. He can be an $8 trillion company, which is essentially doubling his current market cap, if he sells to thousands of people. And so he designed his technology and his platform to be opposed to virtualization. And anyone who knows and runs GPUs in a data center knows that you can freely sell it as bare metal. So the market motion of like GPUs becoming super popular post OpenAI success, the secondary consequence of that was that data centers now are in a position to sell in SKUs to customers. So you actually can have inventory that does not require a software virtualization, which is you could say an aggregator, that blocks the ability of the data center to having access to a customer. So Jensen had a goal of knowing that, okay, I want to oppose public cloud. I have to build like basically bare metal deliverable services and products. Now allow data centers to do the same thing. And that like shift is something that people didn't really notice, but now I think more and more people are noticing. So that means that a data center in Kansas City, a data center in Texas, or a data center in London, or or in France is selling a SKU that is not fully fungible. You can't the SKU is in Paris, the SKU is in London. Like you can't just pick it up and move it. But it's the same thing. It's a Tesla there, or BMW there, BMW there. And so it's not priced the same way, clearly, because a Tesla in somewhere near Whitehall would be priced, if you're like renting it, would be priced differently than if it was in Denver or in Paris. And so it fluctuates according to the local dynamics, even though the good itself is a commodity. And that is something that Jensen is only leaning more and more into. The next iterations of the Blackwell series and Rubin series, they're significantly hostile to virtualization. Even the SXM board, if you go look back of when the first SXM board came out, Jensen was trying to be an in-service provider. He was trying to outdo the OEMs to deliver a more integrated solution that both increased performance and customer satisfaction, but was compressing the stack more towards him, where he was getting closer and closer to customers. And even with these next iterations, you said even further of like, how is someone going to virtualize a GB200 or GB300? No one even really knows because it looks kind of impossible. And sure, someone will try to do it, but it's also like, why would a customer even want that? It doesn't provide any innate value to the end customer. It's just a software running on the stack that's making it more complicated, making it a little bit slower. And so these next series are going to push more and more into that. Even liquid cooling, yes, is it giving a performance advantage? Is it reducing, trying to bend the power curve? Absolutely. But what does that also mean is that now NVIDIA can deliver a more fully integrated product. That the GB series is delivered as a full rack. Like previously, that was, the DGX was a fully delivered server. So he's continuing to iterate closer and closer to the end customer. And his clear goal is to generate thousands of neoclouds around the world. His end goal is to not sell to public cloud. His end goal is to build an ecosystem that is the moat that protects NVIDIA. So in that thesis about the space which we're operating in, we believe that the whole industry needs a global distribution system, which is basically a common API and a common programmatic framework that allows capacity and customers to move between different regions and in different types of capacity according to their end customer needs or their end workload needs. And in the airlines industry, that's Travelport, Amadeus, and Sabre. And this is the system of coding that enables airlines to move and code share, to book you onto a different flight, to sell capacity to Kayak. It also is the means of hotel companies to give up capacity and to create these like packages and between get a rental car, hotel, and airline ticket. And so we're building that framework, the common API, the common programmatic framework that would define how GPU capacity gets moved between different data centers, and customers can just integrate with this one API and be able to package GPU capacity, similar to Expedia Priceline. These would be like inference as a service companies, token as a service, or marketplaces that are provide packages on top of GPUs. And so because of all these like trends that were happening, we believed, as I said earlier, that data centers are going to be innately valuable in the future. All that just accelerated under Jensen and the big infrastructure builder on AI. We were just kind of there. Like we had the right customer, and then just the infrastructure shift happened, and we were the thing that was trying to operationalize capacity in data center.
So with the way in which you're operating and creating this API, so you could have a small startup neo cloud in, I don't know, France or whatever, that's basically, identified a customer, and all they need to do is speak to you because that customer wants, H100s in Texas. They don't have to have that hardware. They don't have to have a data center. They can just connect to you. So you've got the supply. Are you guys particularly interested in the demand, or actually you just banking on the fact that all these other neo clouds and other organizations are going to have that demand for you?
Yeah, so we mostly sell wholesale because our goal is to be the largest management company in the world, so supply. And our thesis is that this market is mostly supply driven, not always, but mostly supply driven. That data center in France, it could go try to build the data center in Texas, expose itself to significant risk, capex, years of work, or it can just connect to our API, create code sharing, and just get access to our data center, and then they can just resell on their platform. And so that's the space that we're targeting, is that certainly the verticalized, every neo cloud will have some verticalized exposure. They'll have some core fleet, the CEO of Microsoft refers to his GPUs as fleets, just as airlines have A320s and Airbus and Boeings. And because it's fundamentally a platform to carry workloads, which are just, customers and seats, butts and seats, to go particular routes. And that's just is it an international route? So that would be like a training run, or is it a regional route, which would be like an inferencing task? And so if you think of it that way, of eventually neoclouds can still be, again, innately quite successful as a verticalized provider, but the goals of that are just really different. It's to minimize risk, it's to minimize cost, it's to control your supply chain, it's to try to build applications higher to control end customer experience. It's a lot of work, and so if you look continuing at that metaphor of the airlines industry to GPU, I'm just really skeptical there's really much of a moat beyond the data center itself. And I think Grok coming out yesterday again shows something I wrote months ago, which is that LLMs are just routes. They're they're plane routes from London to Paris, or London to San Francisco, and they're different ways of controlling in the capacity and the inventory between that. But it's accessible to everybody, and then, which is great for the consumer. It's amazing for the consumer that we're going to have all these different ways of running LLMs and different types of reasoning models and post-training stuff that's coming out. And all that's great for AI, because if AI was just 3 companies that made it, it's a very small market. Logically, right? It's just look at this from an economics perspective. That the largest industries in the world, which are almost all commodities, the buildings, land, real estate, energy, agricultural. There's a ton of people who play in the space. Because that shows how big the industry is, that I can handle hundreds of $1 billion of companies, right? $1 billion market cap companies. If it's only 3 companies, it's not a very big, meaningful change to the world, and it's not a meaningful change to any of our sort of economic calculus and the future curve of innovation. But if AI is just what we believe is like crypto, which is it's available to everybody, and it's something that the moat really is the underlying infrastructure beneath the LLM. That's the thing, that the operating model. Then you see how it connects more to airlines. Delta's goal, or American Airlines' goal, British Airways' goal, is to for BA specifically, is to not make Heathrow terrible, right? It has to go down stack, because if Heathrow is terrible, as my last 3 times I've gone through this, absolutely horrendous. And if that's terrible, then people won't use it. So it's like a downstream, right? Yeah. BA doesn't go it builds, sure, it has an app, absolutely. But if you look at what's reporting in terms of expensing, the app development is very tiny, because it doesn't expect most people to use the app, like their British Airways, expects the coding, the GDS, to run most of its capacity because the app is designed for the loyal customers. It's designed for those that are, what is it called, Ava, whatever.
Avios points,
yeah, because that's what it's designed for. So if you're like a NeoCloud, then you're going to go upstack only for your most loyal customers, which you'll generate your highest net margin on, which makes sense. But in terms of like getting rest of your capacity, the customer demand and expectation of if you're a NeoCloud in England to serve capacity in the United States, you're like, well, that's a significant risk for me. I might as well just wire into an API. I can still own my loyal customers, but how am I supposed to put an H100 in the United States and an H100 in Taiwan and an H100 in Vietnam for all of my customers in the UK? And the reality is like you just can't. And the customer demand is significantly bigger than even the largest NeoClouds in the world. So the vertical players we see as absolutely necessary because they own the infrastructure for us. So we don't own any of the data center infrastructure. We just operate it. We manage it. Yeah. But we are working on problem sets because we're a horizontal modular solution. We work on things that they don't work on. Like I work on, for example, how to automate onboarding of a new server. So when you plug in a new server today, if you're a NeoCloud, you got to run through all these processes manually with your network engineer or your sysadmin engineer to take that server and put it into a customer pool. You're usually looking at like weeks of work. With us, it can be done in 15 minutes. Now, the NeoCloud is not incentivized to make that automate. Like why, they're only going to do that how many times in a year, right? Not that much. But for me, I'm working on problem sets of like if I have to onboard tons of capacity, I'm going to work on different things. I'm going to work on like how do you automate Weka? How do you automate Slurm? How do you make the NVIDIA enterprise software be fungible to where I can deliver it on a per diem basis? If you're a NeoCloud, you don't work on that problem because you're working on downstack problems. Like you're going to prioritize, like how do I lower my infrastructure costs? How do I manage my power? How do I increase uptime? But for me, I'm like, okay, I'm working on these other infrastructure automation questions because I'm working on how to greatly expand as much as possible. And different problems rise up from a software perspective that these other guys aren't working on, which is why I think that you have seen, or I guess we're one of the few companies that multiple NeoClouds have invested in because we just don't work on the same things. And the end goal is the same for, like you could say, for our company and their company, which is like make money on GPUs, but we're coming at it from a different slice that in the end we think will be one of the dominant players in the space because there's just not enough. There's not enough capital that an individual NeoCloud can get that can get them to address all their customer demands. But we have seen that platforms that have used us, they basically not only grow significantly faster because they can address their customer requests by having a global distribution system like us, but they then also let go of a portion of their operating model that they kind of hate. And in most of these like software platforms that are somewhat verticalized or NeoClouds that are trying to manage data centers and trying to like do that. It's just funny if you ask them, other NeoClouds infrastructure providers or horizontal marketplaces, that they hate dealing with data centers. They just like they don't like it. It's a different language and that's what we're really good at. Is like, and so we stop at bare metal. As soon as you get that IP address, as soon as you get access to 100% access to your network and your node machine, we stop. We don't build anything higher than that. And so the platforms that are doing, inference as a service or LLM as a service, they like that because now they don't have to deal with data centers. They don't have to deal with understanding NVIDIA errors or understanding network config problems.
They can just spin up really quickly.
They can just spin up, and then they can just address customer demand.
So just on that, before we finish up, so you wrote a really interesting article sort of summarizing what we saw in 2024 with data centers and the demand of GPUs and what that meant in terms of all the investment and what have you. And then you kind of did a little bit about what 2025 means for you. Now, in short, it was really all about how exciting it is, how much demand's out there, how much they're spending, and obviously you've got to capitalize on that. What are the risks for you this year, do you think? Because it sounds great. It sounds like there's loads of demand. You're getting the supply. You're spinning up people really, really quickly. What are the risks that you've got to be mitigating? Or quite frankly, I mean, hopefully, you don't want to jinx it. It's not foolproof. Yeah. Any particular risks out there?
So the first would be regulatory. So I do like policy because it definitely impacts humans' lives, and I want as many human beings in the world to be free and to not be poor. So human flourishing is a big metaphysic of mine. Politicians, I think, have an insane, irrational, on the verge of a psychosis, definitely neurotic view of AI, and it's delusional. So it's on the verge of psychosis. Some of that is regulatory capture, as in the LLM companies or GPU companies. They want regulatory capture to prevent new entrants, and I think most of it's subconscious because you ask LLM or GPU people that are large, like, well, way ahead of me. And if they're not first principles type people, they kind of get washed in the ether of, oh, LLMs could do this or could do this. But from the extension of the English Enlightenment, thank God that we're an English Enlightenment country, is like the way you regulate is through negative rights. And so when you do something bad is when we actually regulate. We don't do the French way of like, well, here are all the things you can do. We're English, so we're like, here are the things you cannot do. And many of the things that they're worried about are already illegal. And this is a big risk for the AI GPU world. And the one thing that is mitigating that is just demand. That this is one of those things that is I use another metaphor, which is like the bomb, so the nuclear weapons, and that's one of those things of like it is an innate demand across almost every modern country. And I think the total number of states that have publicly admitted they have nuclear weapons is like 12, I think. Which I actually didn't know this. Like Oppenheimer agreed to a deal with the UK because the UK was actually the first of the allies to be developing a nuclear weapon, and the UK gave all the intelligence program to America to go to Los Alamos, and the US government agreed to give all the data over once we actually did, I think, a thermal. And then, no, actually the first one was Hydra. So the first bomb. And then America totally backed out. It was just like, no, we're not giving it to you now, right? And then so the UK started up its own program. I think it was in the late 50s is when they actually did the first test. But I think it's like that is like with GPUs of like it's one of those things that has innate diffusion. Mm-hmm. And so the one reason why the governments around the world want to regulate this is because they feel really uncomfortable when something has such innate diffusion and high demand and they don't have control over it. It's like it's just innate to them of like I got to touch it, right? Mm-hmm. But you also see how it's directly connected to sovereignty ideas, which is that your new prime minister announced this £60 billion program to build AI and data center facilities, and obviously the Paris summit where supposedly 100,000 data centers around Europe are going to be built. I'm guessing none of them are going to be Germany, so they're going to be elsewhere. So you have all of these desires of these sovereigns to be engaged on this issue because they feel like the escape velocity is so fast that it's just a regulator's job from a raison d'etre perspective is to regulate. So when they see something, they feel like they touch it, and I think that's something that the escape velocity is so fast that it is outpacing government regulators. The biggest example clearly is DeepSeek. Another one just came out called StepFun that found a way to do distributed training on H800s to get around InfiniBand. I wrote about it yesterday. So the escape velocity, when you have massive diffusion of information, because this is an open source movement, similar again to the nuclear weapon, and actually Stalin thought that America was really close because they stopped publishing data of public papers about like how to do this stuff, and just disappeared for like a year. And so Stalin was like, "Oh crap, they're like super close." But it's like that. It's like this is science, this is engineering, it's math. So that's a universal language, and it's not like we're regulating EUV, silicon manufacturing equipment. Like that type of equipment costs $100 to $200 million. It's the size of a home, and or like a fighter jet or an aircraft carrier or a submarine. Like those things you can regulate because I can't put an F-35 into my backpack and go to China. And so regulators are in this like position of trying to play whack-a-mole. But I do think the escape velocity will be so incredibly fast that they just won't be able to do anything about it, which I think is good for the world. And I think is like because I want everyone to have AI because I think it's an innate positive thing for all of humanity. And then so the second thing I would say would be like people who don't adopt this sort of GDS sort of framework about how to do capacity will build capacity that they can't support and then would basically dump. So we have all these anti-dumping laws for steel and for corn, et cetera. and some of those ones who have dumped, you mentioned before we started recording, that they basically got a bunch of supply, didn't know how to manage it, basically created a dumping situation and then it hurt providers that were legitimate. So it's a little bit of a tale of two cities. There's like the suppliers that are mostly all of us know are at 98 to 100% capacity. And they're maxed out. And then there's a bunch of people in the long tail that don't know how to manage customers, don't know how to manage the gear, are creating this kind of weird pricing framework that suppliers are operating in. So I do think the H200s and Blackwells will be different. I don't think that the glut that was on H100s will reflect into the future models or future as next-gen cards. There also was a theory that some of the H100 buyers were basically just creating offsets for their crypto gains. So that was kind of floating around as an idea. Either way, that I do think that the next version of the builds will have less of this kind of insane stage build out, and it'll be more judicious about what they're spending and investing money. But that remains to be a problem is that certain suppliers are creating stuff they don't know how to manage. They don't know how to manage hardware itself and manage customer expectations, and then they just continue to drive the price down, and that good providers are losing margin because of that, which by the way happened with the airlines industry. That's why they built Sabre, was that there was all of this like pricing issue between different routes and different what airlines were doing, and also those routes were heavily regulated until Carter. And then when they became deregulated, they had to find a way to manage pricing between customer demand and competitors. And so it just behooved everyone to say, hey, like I get it, we're all competitive, but we need to be competition and friendly. And like a friendly-ish or something like that, like some form of we work together, but we also are competitive. Because it behooves, the whole market will grow if we do this. And that's what the airlines industry eventually did. And Kayak and the associated things that run on these rails, Boeing is a bigger company than it ever was because of on-demand. On-demand is Kayak and the GDS. So the more that the market will move on demand, which is logical too, it's like customers want it to be on demand. That the data centers just kind of have to get over that if they want to be in this space, they cannot expect to come get a 3-year deal or 2-year deal for a 1024. They're going to go to CoreWeave because they have the capital. They've proven their model. The only way that you can do that is to have like a unique operating model. Like I get free power, I have a tax-free zone or duty-free zone, or and that again goes to focus. If you're a neocloud, you go down stack, don't go up stack. There's little value in the Kubernetes virtualization layer, like literally very little to zero. So, but if you can figure out an interesting operational model like that, the government gives you free energy, you can be different than CoreWeave to where if someone wants a 1024, you can offer a different operating framework than they can. So that's a comparative moat. But when it comes to like how the pricing is like breaking out between these like different providers, if you don't participate in the system, you will continually be isolated, and then that will continue to create these like dumping sort of scenarios. But like the other thing I think is going to be really interesting is like because of the H100s that have been like super overbuilt not because NVIDIA had the right goal, the number of base boards it was selling, but Blackwell is delayed 12 months, so that's why it's overbuilt. But now you get in this other zone of like if data center space is scarce and data center demand's growing at 20 to 30% compounding annual growth rate. So now you have all these servers that you need to replace because the power density of a Blackwell is not nearly double, but almost double for a Hopper. And you're already scarce on real estate. So now you got to do something with H100. So that becomes a whole super interesting space of what happens to second life H100s and how does that reflect into LLMs and inferencing tasks and things like that. I think it's going to be huge. I think the reason why post-training is going to be so successful is mostly because of the glut of H100s. They're going to be able to do really cool things from reasoning models or artificial data because of the glut of H100s. And it's one of those kind of cool secondary consequences that if you're only paying attention to when am I going to get a Rubin or when I'm going to get a Blackwell, you don't see that the bigger market opportunity is like, how do I take advantage of the glut of H100s and I'm a data center and buying that maybe on cheap and then redoing like my power framework to where I can be a massive post-training service.
And I think, hopefully we're going to see people learn from, previous misfortunes or mistakes, if you will, and not be buying high and trying to sell low and all that. And like you say, dumping. So look, last question to close off. So a lot of people that listen to this are entrepreneurs like yourself, startup businesses, or guys just working in corporations within the AI HPC space. But question for those sort of founders, AI tech partners, as an entrepreneur, what advice can you give to sort of an early stage startup? Just to keep them going and get them moving forward.
Every company has a phase of it being hard. That is a absolute truth. But the coup de grace of it being hard is not it continues being hard. And every entrepreneur works on problems, but you want good problems, not bad problems. And I think that the entrepreneurs tend to be masochistic and they're thinking, well, if it's not painful, if it's not hard, then it's not working right. In reality, it's like you want a company that's working well to have good problems. And the only way to know if it's good problems is you. And this is also assumes that as the CEO, your job is problems. Like if it comes to you, it's because you're the only person that can do it. So it's not like if things are going great, it actually doesn't come to you. It goes to other people. You're the end kind of like a sponge of like issues in the company. But the key is the telling of like is the end goal, the ultimate end goal is to work on problems that are good problems to have, not problems that are difficult and constantly. And that goes to the innate, like you could have wrong product market fit, you could have the wrong team, you could just like not be into it. And I think that goes to the second advice of like you got to be into it. Being an entrepreneur is significantly more passion than it is logic, but that's also makes humans great is passion. The roles that are going to be augmented under AI are things that are not particularly very passionate. Like they're things that require a significant amount of money to invest in, like engineers and finance people. But the roles that are already optimized for computers are going to be the ones that be most augmented. Now that doesn't mean that those roles go away. I believe in augmentation, not replacement. That means that more people will be able to become engineers, more people will be able to do finance, more people will become investment bankers because you have these AI tools that are computers. And all the things I just said are math. They're math problems. But the things that become not augmented are basically things that do not have inflationary problems, like deflationary problems, not inflationary, deflationary. So that'd be like a hairstylist or a chef or David Beckham or fashion. Like these are expressions of human passion that you cannot put into an AI. There is only one Cristiano Ronaldo. There is only one Messi, and that's why they're valued as the way they are. But that's also the greatest reflection of human passions. And so I think that if you think about being an entrepreneur, that's also why entrepreneurs are not going to be augmented by AI, because what makes Elon is Elon. There's no one who's going to replace Elon. Like you can't do comparables. You can't do a Ben Chesky Airbnb with the Elon comparison, because they're just two different peoples. They have two different goals. Same with Travis Kalanick to like an investor. Like it's like you have these goods that are not commoditizable, they're not even fully fungible, and I think that when you become an entrepreneur, you have to lean into those passions, because that's actually what generates your innate stochastic returns. And if you are not into it and you're not loving it, and it doesn't even necessarily have to be the market, it doesn't necessarily have to be the product, it could just be the team, right? It could be these things that like really motivate you. You're not going to be able to find that hole, find that zone, and kind of like lean into the experimentation, hypothesis driven development that is becoming an entrepreneur. So I'd say like those two things of like, you don't want it to be masochistically painful because that's what you think you deserve, or that's going to be the way to success. You want to work on good problems, not bad problems. And the more good problems you work on means you're heading towards the right direction. But as a CEO or entrepreneur, you're always going to be working on problems. Yep. And the other one is that passion is the one that's going to generate your return profile as an entrepreneur. And that could be not the most people think it would have to be always the industry. I don't think it's always the industry. It could be the act of building, the act of creating. It could be the product. It could be the team. It could be the industry. But that passion is what's going to give you the ability to go that extra mile, to find that hole in the market, and to also sell in a manner to people to believe in you. But at the end of if you are betting on the AI and the GPU space, that's also going to be a thing that is completely irreplaceable. How are you going to make an AI is going to be passionate, right, or be artistic? And those are the things that make people stand up and remember and pay attention to your company.
Well, I mean, that's brilliant. I mean, I think you're right. Problems, good and the bad. You want to be dealing with more of the good ones. And I don't think anyone could suggest that you don't have any passion. It's certainly come across in the last hour. Look, this has been fantastic. Really appreciate you coming on. Going to continue watching and seeing what's going on with Hydra Host as well. And I think you're over in the UK, I believe, or certainly some of your team are over in the next few weeks. I think
the London
the event in March.
Yeah.
So March 12th, 13th, I think at London Cloud Expo Tech Show London. So I look forward to seeing you then as well. But for now, I'll see you next time.
Yeah, thanks, Nick.
Thanks a lot. Take care. Cheers now.
Right.
Thank you for listening to today's episode. If you're looking for more practical advice or inspiration from those who've been there and done it, stick with us. We're releasing new episodes every week, so don't forget to subscribe to the podcast and follow Asobi on LinkedIn. This episode was brought to you by Asobi. I'm the founder and managing director, and it's our mission to connect the very best talent to the most exciting scale-ups in the artificial intelligence, machine learning and data center space. Thanks again. See you next time.